Hey, Bobby Trays! I want to do a video analysis update of the stock market. We're going to get right into it. But first, safety first. We're going to talk about risk management. And I'm not going to go into a long monologue, but sometimes in investing, sometimes in trading, I think there's one thing every single person can agree on FinSwit, and that's if you do this long enough, you stick around long enough, you see some weird stuff from time to time. You see some weird stuff. I saw some weird stuff today, and sometimes that weird stuff affects a stock that you own, right? And so, as much as I say, hey, I don't really care about those fundamental media articles. I don't, I'm all Elliott Wave and option statistics and quantitative analysis. And, sometimes you just can't help it. Sometimes you just can't help it. I think I got a little, this happens to everyone. There's no crying in investing. There's no, you can't, throw up your arms, at the referee. But, damn, man. Wow, let's just look at this. I'm not even mad. I had something I wanted to say, but I wanted to save you guys some time. But basically, what I was going to say is that, just real quick for the metaphorical purposes, when I was growing up, parents really wanted their kids, I grew up in the South, right? Parents really wanted their kids to learn the Bible. But guess what? Priests in their 40s, 50s, and 60s, they're really boring people. Pastors, they're boring people, right? You got a 12-year-old, 13-year-old kid, they're not going to give a damn, right? So that's how it was when I was in 6th grade, right? I was in 6th grade, right? We all, nah, man, it's all about airsoft guns and, whatever, like the Bible's boring, right? But then my 6th grade teacher, she was also a licensed pharmacist. So she taught science and she taught theology. And she taught the Old Testament. And she was like, hey guys, I know you thought your whole life that the Bible is boring. But we're going to talk about the Old Testament. And we're actually going to read the Old Testament. And we're going to talk about what's really going on. We're not going to sugarcoat it. Y'all are old enough to hear about this, and let me tell you, there's a lot of sex in the Old Testament. There's a lot of, infidelity. There's a lot of tea, right? There's a lot of gossip, right? David, gets his wife Bathsheba because he's a peeping Tom and he sees her showering. So then he tells his guards, I want to marry that naked woman that I was spying on. So I want Bathsheba's husband to be in the front line of war and to have him killed. And it worked. He was killed. Bathsheba's husband was killed. King David marries this woman. That, Samson, all types of wild stuff, right? Hagar and, Sarah and, Abraham. It's like, whoa, these guys were having a threesome. And, Abraham was getting it in when he was old. You know what I mean? But anyway, the point is, once I realized how much gossip and stuff was going on, I was like, wait a minute, I gotta check this out. I ended up reading the entire Bible twice, right? So it worked, right? They just had to tell me how juicy it was. And I think a lot of people think finance is boring, but this is one of those times where you just wake up and there's some tea, right? Especially, when I see what's going on in the options market. So let's get into medical property stress. You might not have been aware of this. I own this stock, so I gotta talk about it. It's down today, and it's down for an interesting reason. Today was supposed to be the day that MPW announces its quarterly dividend, which would have been a pretty high yield if they had announced it, but they didn't announce it. And it's not really clear why they didn't announce it until a major hit piece was published by the author of the Wall Street Journal article, whose name is Jonathan Weil, right? So Jonathan Weil, we just got to read this, right? So Medical Properties Trust today, which is down 7.60% at close, responded to the most recent of several false and misleading articles published by the Wall Street Journal, right? Literally and this is the Wall Street Journal, with the largest hospital landlord in the country, and they're accusing each other of pretty serious stuff. And, you know, I'm just sitting here eating the popcorn, wondering I'm going to get my dividend. So today they had to respond to this. And so what this was all about in this case related to the company's May 23, 2023 transaction with Prospect Medical Holdings, right? So while MPT engaged with the author, so Medical Properties is saying, hey, we tried to talk to Jonathan Weil to ensure full awareness of all the facts surrounding this transaction and the company's investment in PHP Holdings, LLC, Mr. Weil decided to wholly disregard this information in the article that was published. Importantly, the Wall Street Journal proceeded with publication before Prospect was able to provide necessary clarifications, even though Prospect indicated it intended to do so, and the article itself acknowledging the extraordinary disruption and distraction that Prospect is currently dealing with following a ransomware attack. As such, MPW believes it is important to clarify the following facts for the investment community, and they kind of said what their take is, and, you know, you can read the article, right? But it's really interesting to me because I take a lot of detailed notes and I document a lot of stuff. And in a video yesterday, I was talking about a company called Hawaiian Electric that institutions were using they were using straddles and strangles to buy shares of Hawaiian Electric risk-free, right? So Hawaiian Electric, they bought these strangles and straddles on it, the 12.5 put and the 22.5 call. My expectation is that when Hawaiian Electric fell after this, and this was taken 8/16, when Hawaiian Electric fell after this, they were able to buy shares of Hawaiian Electric against those puts that were in the money when it fell to 10. And they also, I showed in that video, they locked it in, right? So I was talking about them using a complicated option strategy to buy shares of a dividend payer. Also, Hawaiian Electric was supposed to go ex-dividend. Isn't that interesting this week? And Medical Properties, same thing, is also on this screener, right? So this picture is from 8/16. Okay, so on 8/16, the institutions were buying the 7 put and the 8 call on MPW when it was at 7.39, expiring 9/8/23. Okay, so what happens today, just 2 days later, is that MPW is down dramatically, like 15%. You know, it almost falls to 6. Right, so it goes almost $1 below their strike price. So what happens then? Well, this delta that you see right here is going to go from -34 to negative, a big number. It's going to be a large, you know, downside bias. And so if the MMs want to, they have to offset that if they want to, and they can buy shares against MPW that are risk-free, because if MPW keeps falling, then they can just exercise the put, even if the dividend is reduced, right? So that was all the exact same thing I was talking about going on with Hawaiian Electric. The idea that MMs could use straddles and strangles to accumulate shares of stocks. And while retail is at peak uncertainty, right? Think about the peak uncertainty with Hawaiian Electric and all the people who invest in MPW. Think about how much uncertainty they face today. They were expecting to see a dividend announcement, and instead that company didn't even announce the dividend because they had to respond to a hit piece. And 2 days before, one of the largest media publications in the world published a hit piece about one of the largest hospital landlords in America. The institutions bought a lot of short-dated strangles that allowed them potentially to buy as many shares as they wanted of MPW against those puts, risk-free, while retail is stopping out and having to read this article at max uncertainty, and they still haven't gotten a dividend announcement, right? You know, and it's not just one thing. This is a different one, Blue Apron, right? I've had a post where I was talking about the MMs before this reverse stock split. I was talking about how the MMs were buying straddles on Blue Apron when it was at $1. Right? Then it went up here. They bought more straddles on Blue Apron when it was at $1.5, and then it fell down to here. So what happened? Well, just like I said in my post, they had all these in the money puts that they could accumulate shares of Blue Apron against risk free. And I even said, I think I know where they might be, thinking. And then now we look at Blue Apron from this low, 1, 2, and this isn't 3, 4 per Elliott wave theory, because we're making a new high on the daily RSI, right? So because we're making a new high on the daily RSI, that suggests this isn't 1, 2, 3, 4, 5, and Blue Apron goes down. It's 1, 2, 1, 2, and we're gonna see Blue Apron impulse, right? So that invalidation would be 6.81, which was a little far away. But Blue Apron could go, break above this, 10.49 high, and that this could be 1, 2, 1, 2, wave 3 of wave 3. And I also talked about in this post how, the MMs got lucky. They have a lot of in the money puts they can buy shares against, right? Happens with MPW during peak uncertainty, uncannily. Happens with Hawaiian Electric, right? So this is going on, right? And so this is part of being, a stock analyst, is seeing stuff like this. You see things that are, just kind of weird, right? And a lot of people don't like talking about it because it seems odd, but yeah, isn't that kind of weird? The institutions bought a lot of, short-dated strangles on MPW, and then 2 days later, it fell 15% in 1 day. On the day it's supposed to announce its dividend, it fell to a massive yield and had a massive put delta that the MMs could buy against their short-dated in-the-money puts on. I mean, same thing with Hawaiian Electric, same thing with Starbucks near, super cycle lows. When they're switching their CEO, peak uncertainty, you see it, right? It is part of stock analysis. You see, a bunch of institutions loading up, strangles on Starbucks when they're changing their CEO, when everyone's scared, and then the CEO is buying shares, and those lucky MMs, they get a potential monopoly, while retail was afraid. Anyway, I also wanted to say in that hedging regard that I rolled out my options on the Metaverse ETF MBTV. So I have my own options that I use that I learned from watching the MMs do this. I rolled out those options that expire on August, today, basically, and I rolled them to February 16th of 2024. So the biggest downside exposure that I'm using on the Metaverse ETF METV is the 11 put in the 10 call expiring in mid to late November, the 12 put in the 11 call expiring that February 16th expiration. For the same expiration, the 11 put in the 10 call. For the same expiration, the 10 put in the 9 call. So that's just to give a quick overview of how I have direct downside put exposure. So if I'm wrong, and what the bears say is that this is wave A, this is wave B, we're about to go equal legs down to the low 300s, I have unlimited downside exposure. I'll catch the big short with Michael Burry unless the Metaverse ETF completely decorrelates. The analysis I've done statistically is that they're about 97-98% correlated. The Metaverse ETF has a higher beta, so statistically it's more likely to fall more than the Nasdaq and the S&P. It's also more likely to rise faster than the S&P should the market go up. Statistically, that's all beta analysis. Anyway, y'all are going to be at the end of the week. It's all tickers, gamma, but you also get Elliott wave. All right, so for the S&P, from this low is the most important count. 1, 2, 1, 2. The big debate right now is that we're never going to break above this high. This is wave A. This was a big bull trap for wave B. This is wave C. Not sure how much it bears repeating. Per Elliott wave, it's not going to make sense to make that argument on Apple, Microsoft, Nvidia, DGRW, SPY, V, and, I could probably go on. Correlation analysis killed the cat. But an Elliott wave, it matters because a lot of those have yet to reach equal legs targets. We'll talk about some of those. No, I can't tell my broker about equal legs targets. But for the S&P, I think a useful level right now for the S&P, I'm more focused on the bigger picture. The idea is that this is 1, 2, 1, 2, and this fits the description of a wave 3 of wave 3 that was entered, right? So this is wave 3 of wave 3. Now we're ending the shallow wave 4 of wave 3. We'll have a wave 5 of wave 3 higher. And per Elliott wave, that wouldn't be the top, in my opinion. That would complete 1, 2, 1, 2, wave 3 of wave 3, wave 4 of wave 3, wave 5 of wave 3, wave 3 of wave 3. So that's a lot of degrees. There's degrees in Elliott wave theory. That's the most important thing to understand, and it's the hardest part for people to understand, is getting the understanding that there are different degrees and different time cycles, okay? So I'm focused on the biggest degrees. I'm actually focused on these big, bold black numbers right here. But within the cycle, this is 1, 2, 1, 2, wave 3 of wave 3. I just said it. So for wave 4, it goes something like this. That 50% level, most of the time, is the most important level. The exception is when it's a high beta stock. Real high beta growth stock, that 50% retracement is going to get clipped for wave 4 all the time. Okay? So for something with a lower beta, that 50% retracement, especially when it lines up with the wave 1 high of 418.31, is a very useful level. In the big picture, this is more of a weekly time frame analysis. 420 to 418.31 is going to invalidate the idea that this is a 1, 2, wave 3, and wave 4. Would it be the end of the world? It wouldn't look great, because then the bulls would be arguing that this is not A, B, C, that this is 1, 2, 1, 2, and then if SPY has a deeper correction below 418, the bulls are then arguing this is another wave 1 and another wave 2. Now, the risk-reward ratio for that setup would be great. Wouldn't want to be changing to that without any deep in the money hedges. So above 420.04 to 418.31, this is a shallow wave 4 correction. If it's the perfect description of a shallow wave 4 correction, you know, and it hasn't even hit the 38.2% retracement yet. So if the market made a new wave 5 higher to all-time highs, it'd be real easy for FinTwit to come out and say, yeah, that was a shallow wave 4. It wasn't even at the 38.2% retracement. Retail got out. Wouldn't be hard to say at all. Don't think they would. Let's look at Apple. Apple, from yield max, dividends getting higher. I think it also supports the idea. I like the daily. I think it also supports the idea. Why are these fibs so far out? 418.23. So I think Apple also kind of supports the idea, and Microsoft too. It's a little cleaner. 1, 2, wave 3, wave 4. We're at the 50% retracement. The 61.8% retracement when it's a higher beta, because I like for wave 4, I like to align it with the wave 1 high. The wave 1 high is 157.38. That's pretty far. 164.65 is the kind of further invalidation level. If Apple went below that, I think that would invalidate 1, 2, 3, 4. Bulls are going to have to argue it's 1, 2, 1, 2. We can get there if we get there. What I think this is 1, 2, wave 3. This is a shallow wave 4 at the 50% retracement. I'm expecting to hold 164.65, very wide, but it's Apple's the biggest tech holding for a wave 4. I think it's pretty fair to say, you know, if Apple's breaking below and closing below this wave 1 high of 157 below 157.38, LA wave bulls are not going to be wanting to make the argument that this is a very long wave 4, a very deep wave 4 for the largest holding in basically every market ETF, right? So I think 164.65, if I'm making that wave 4 argument, 157.38 would be pretty wide. That would invalidate a wave 4. Until then, a wave 5 going higher, you know, is not crazy. And all Apple would also have to do, especially when we get these deeper wave 4 corrections, all Apple would have to do, if it turned around, if the daily RSI broke above 77.61, let's say Apple did turn around and it started going up into the 200s, what could happen? Well, we could see that Apple's daily RSI breaks above 77.61, and per Elliott wave theory, that would suggest that this count is actually too conservative. That this is a 1, 2, 1, 2, wave 3 of wave 3 beginning, not a 1, 2, 3, 4, wave 5. So Apple could turn around. It's at the 50% retracement of this rally. And in the big picture, if Apple turned around and it broke above 77.61, that would be 1, 2, 1, 2, wave 3 of wave 3. It'd be easy to see how they got it out. My preferred count, how they got retail out. My preferred count for Apple is that this is 1, 2, 3, 4, 5 waves. I'm looking for 164.65 to not get broken. This wave 1 high of 157.38 is a nice invalidation. The minimum target is the length of wave 1, placed at the wave 4 low, taking Apple up to 204 with the possibility of going a little higher. And if it did go 1, 2, 3, 4, 5 waves, even if it corrected after, that 5 waves impulse would also be a useful piece of evidence for a larger degree count. Anyway, Microsoft won't spend too much time because it's almost identical, exact same thing. I had these, very small 1 and 2s marked for Microsoft. I'll delete them, just wanted to show, they were there. Right, but I think for Microsoft, they said 1, 2, 1, 2, wave 3, too crazy. Microsoft's at an all-time high. Apple's at an all-time high. So for the SPY, Elliott wave theorists, I'm not saying it's not going to work. I'm saying for the bears, when someone says, hey, how is that Microsoft count and that Apple count, going to work with your SPY count, and you don't have an answer, that's not good. That's just what I've noticed. A lot of people drive down the highway without seatbelts. I'm not saying they're all going to fly through the windshield. I'm just saying they could, right? And it's not a good idea. So for Microsoft, I think this, very similar to Apple, and even similar to S&P, is one people are going to look back and say, yeah, it was nothing. All right, 366.78. 366. Oh my gosh. What in the world? Oh, yeah, sorry. 245.61. So for this one, I went through the rules and the reasoning why. The levels, this wave 1 high is way too wide. If it did come down to it, that wave 1 high would be necessary, but I think the 61.8% retracement, 191.90, it's about the same distance, maybe not percentage-wise, but dollar-wise with Apple and that stop. I think that's kind of that corresponding level below that 61.8% retracement. 291.90, bulls need to revisit the idea. This is 1, 2, 1, 2. Wave 3, wave 4, wave 5, below the 61.8% retracement. They're probably going to have to revise that count to another wave 1 and another wave 2. So that's Microsoft, but I do think we actually hold, 191.90. And again, Microsoft turning around, it would only have to break above 74.78 on the weekly chart. And per Elliott wave, if Microsoft held above 291.90 and it broke above the weekly RSI of 74.78, I would suggest, yes, this isn't 1, 2, 3, 4, 5. It's 1, 2, 1, 2, wave 3 of wave 3. So again, that's not my preferred count. I'm just saying it could happen. That's kind of to define the upside risk. And the reason I kind of mentioned that for Microsoft is because if wave 5 is the length of wave 1 placed at the wave 4 low, Microsoft would just barely make a new high. It would just barely make a new high. It wouldn't be, impossible to see this is where a wave 3 ends, but a lot of times, wave 3, a wave 5, that would be a pretty short wave 5 is all I'm saying. I'm not saying it couldn't happen, right? But I'm just saying that'd be a pretty short wave 5. Wave 5 could also be the length of wave 3 places the wave 4 low. And if that happened, I imagine we'd see the RSI break above 74.78. So that's why I like above 291.90. Microsoft breaking above this, high and potentially revising this to, not a wave 5 being entered, but potentially even in the bigger picture, a wave 3 being entered. The Elliott wave rule that wave 5 ends with momentum divergence is going to be needed to be seen to do that. That's going to take the weekly RSI above 74.78. Let's go into, we'll do the Nasdaq real quick. Very similar idea, basically the exact same. For the sake of time, I'll just get right into the fibs. I already have the fibs, right? That 50% level is 336.59. I did this pretty recently. The 50% retracement with XOK from that video earlier this week, also going to be very important. Palo Alto Networks, someone actually asked about this, and it was a great request. By the way, Estee Lauder also looks like it was a great request. I'll probably post about that one soon because it got pretty close to a nice RR level. That I think that 2020 low, potentially the Estee Lauder setup could have interesting RR. I'll probably post about that. Anyway, this was a different request. Palo Alto Networks potentially showing the idea, how some of these could be turning around. I just want to show, very similar to Apple and Microsoft, maybe we're getting a little bit of a leader that this, right? Because Palo Alto Networks, most likely, the same similar dates with Microsoft and, especially Microsoft in that software sector. These look pretty similar. ABC corrections, maybe Palo Alto Networks is giving a sneak peek. Anyway, someone pointed this chart out to me, so I think it looks kind of similar to Apple and Microsoft, and if Palo Alto Networks breaks above this wave 3 high, that'd be a big deal for sure. Anyway, IWM, haven't talked about this recently. I posted about the Royce Value Trust. The big deal, just to be frank, is that from this low, and maybe talking about XLF and the energy stocks, which for the sake of time, I'm not sure I'm going to do in this video, but I've posted about crude recently. I've posted about XLF recently. So I kind of wanted to touch that side of the market just a little bit. Those sectors kind of have, a similar, dynamic, similar holdings with the Russell 2000. What I'm trying to say is that it's generally a pretty fair statement to make. There's a lot of oil, there's a lot of banks in the Russell 2000. I posted about why I think those sectors could be playing catch up or sneakily be playing catch up. The Russell 2000, even, with some of these growth stocks that we're going to get into, might be suggesting that looking at the smaller companies, that's going to sound silly. Maybe it's not silly. So for the Russell, I think that from this low, 1, 2, 3, 4, 5 waves up, I can definitely subdivide that. But the real thing is that from this low, if this is a wave 1, and just for the sake of time, the subdivision would be 1, 2, 3, 4, 5, wave 1, or wave A, wave 2, or wave B. If we're above the 61.8% retracement, that's a very useful level for the Russell 2000 to invalidate entering a wave 3 or wave C. Now, realistically, the more proper term would be stop, because the 61.8% retracement is a commonplace for wave 2 and wave B to end. But the main idea with the Russell is that above 152.52, and also from this low, really above this low too, it's not the prettiest, but we've seen Goldman Sachs make a new all-time high. JP Morgan could be following it, and a lot of bears are saying that, this doesn't look like a clean 5 waves impulse from this low. What the bears are saying, I can see why they think it. They're saying that this is a 3 waves correction. They're saying they're going to look at this and they're going to say, where is the 5 waves subdivision here, puppy trades? Is this a wave 1, A, B, C, expanded flat? And that's kind of more of the, or is this realistically just a 3 waves correction? So they're going to have their reasoning for saying that won't work. So that, a super tight level for this, by the way, I might be getting off track. Above 162.50, I would say is a tight level. That's pick the low. Above, in the bigger picture, 152.52, I think there's a good chance that we've seen a lot of oil stocks kind of already go break above this high, give that leading indicator kind of look. We saw Berkshire Hathaway recently break above this high, and I see a lot of kind of financials personally in oil stocks that I can see breaking above this high. So I'm not taking lightly the bear argument, that this is a 3 waves, A, B, C correction, and we go lower. That's what I've got the metaverse straddles for. That's what I've got RYLD for. But I think when we look at this correction, this could be a rotation. And one of because when the market's rotating, especially when it's near the end of the quarter, near quad witching, the VIX is spiking, that's when the MMs like to kind of rebalance. Especially, that September quad witching, because that's when they're, kind of, for a lot of asset managers, there's different industries, but a lot of fund managers, their big year ends in the September quarter, because then they have to start getting ready for the next year. Anyway, might have lost some people on the crazy train there. Above 152.52, above 162.50. I think the Russell may have been a candidate for rotation, and that's kind of what I was trying to say. I also talked about crude oil a lot. I talked about XLF a lot. For the sake of time, I was just going to spend more time on the Russell for Caesar's Palace and Disney. I wanted to talk about, there's this news recently, this acquisition, and I actually had a friend text me about it. So whenever I have a friend text me about something, that's pretty interesting. In the stock market, not like, oh, a friend texted me, that's crazy, I'm a loser. No, like when a friend texts me about like the stock market, it doesn't happen often, right? So someone texted me and asked me about this partnership and made me look at the Caesars chart and PENN. I do think there's an explosive setup. What I told this guy is I said, hey, I don't really see a downside level to trade against for PENN. For Caesars, I think 6.02. Sorry, that's not a downside level. That's the low. And there's kind of this setup that this would be very good evidence for PENN, right? Obviously, in the gaming sector, that Caesars, in the long term, could be a winner, and that this could be a nest. And so I'm not trying to correlate Caesars with Disney. I've talked about the airlines in a lot of videos. Southwest Airlines, still pretty, low. But I've talked about Delta Airlines, United Airlines, potentially Boeing, and how some of the cruise lines like Royal Caribbean, could be breaking, I think they were June 2021 highs, and how this kind of travel reopening sector has kind of been dead for a while. I think, Caesars, and I think that Disney, and I think PENN, I got asked about what I thought about this acquisition, and I kind of thought, it's happening at an interesting time in the chart. So PENN and Disney, they had a partnership together. There's something with bar stools. You look it up, you'll know what I'm talking about. But I'm not here to be the fundamental guy. There's a lot of better people for that, as far as like the news and the acquisitions and the mergers, and whatever the MMs think is going to happen to Blue Apron. There's better people for that. But I do think this acquisition or this partnership with Disney, Barstool and PENN, or whatever the heck's going on, is happening at an interesting place in the chart above 40.08. I think Caesars could be proxy evidence for PENN and Disney. That this kind of wave 3 setup could come alive. And it sounds crazy, but with high beta, when high beta enters wave 3, there's and statistically it does happen. Right? It historically happens. Even Monster Beverage, they didn't make easy. Even, definitely none of the big tech FANG winners, they made easy. All of them, you got times. You look back, you see 78.6% retracements for wave 2. I think above 40.0, 8. This could be one of those where, Caesars is one of those growth names. I think that's the best downside level. PENN hit a 52-week low today, so there's really no level. But I just wanted to give Caesars as kind of proxy evidence for a very similar charting phenomenon that I'm seeing with PENN and even Disney, who is also involved in this news. And again, Disney might be more likely to be evidenced by ROKU than it is by, PENN. But I think this is 1, 2, 3, 4, 5 waves for PENN. Wave 1 and wave 2. I think this is another wave 1 and another wave 2 below the 78.6% retracement. 52-week low. No low to trade against, but I do think it's proxy evidence. Disney, there is a low to trade against. There's actually 2 lows to trade against. That one's way too close of 84.07, but for the big picture, very similar travel reopening theme. I'm not going to talk about Southwest Airlines in this video. I'm not going to talk about Boeing in this video. I'm not going to talk about Norwegian Cruise Lines in this video. But there's a sector of travel and reopening, you know, and they look like they're very mature in their charts. But from an LA Wave perspective, they may not be. You know, I know it may be hard to think that from a charting perspective, a hypothetical non-existent investor is discovering American Airlines, or they're discovering Southwest Airlines, or they're discovering Norwegian Cruise Lines or Disney. This, you know, I know it seems crazy, but per LA Wave, sometimes that can happen where you're getting wave 2 of wave 2 lows, you know, 15 years into a company's kind of establishment as a stock market monopoly, right? So for Disney, 1, 2, 3, 4, 5 waves. You know, this low could be broken. If it was broken, yeah, it becomes that 1, 2, you know, and there's other, you know, stocks where that could be the case. The only other proxy evidence I could see for Disney is that Broadcom has gone and broken above this high. And I think Charter Communications, which I may post about, kind of similar in that. But that's the whole thing with Disney. It's kind of a, you know, a unicorn, and above 79.07. I mean, even Target in the woke sector, it's just very hard to define where Disney is, but it's not hard as a sector, but it's not hard to define the risk above 79.07. This is a large wave 1 and wave 2, very similar to American Airlines, very similar to Southwest, very similar to Norwegian Cruise Lines, very similar, you know, even to Roku and streaming. This idea that the unicorn, it has been wearing Mickey ears this whole time, above 79.09. The length of wave 1 places the wave 2 low, you know, says this kind of weird news about Caesars and PENN and Disney, and I know Caesars wasn't involved, but the gaming sector, you know, in investing, we got a little saying like, hey, like my friend texted me about this, like a buddy texted me about this, right? You know, you're getting the buddy text around here. You know, it's a little interesting. Anyway, Enphase Energy, I'm not getting the buddy text. You know, I'm not getting the broker call either. They're making this difficult. I own Enphase Energy. I took a small position and I'm technically bag holding right now. I think from this low, this is a wave 1 and a wave 2. This is another 1, 2, 3, 4, 5 waves up, a 78.6% retracement below the, a wave 2 below the 78.6% retracement. Wave 1, wave 2, wave 1, wave 2. You know, that's the invalidation, 113.40. Very nice RR. I'm going to keep holding it. Expecting a wave 3 towards 339. Possibly proxy evidence. I might post about QCLN soon. I believe Tesla and Enphase, if I'm not mistaken, are still top holdings. I've talked about Tesla a lot. I want to get into a little bit of the nitty gritty. I want to kind of, you know, show you guys what, you know, the chart looks like. I know it looks crazy. I'll diagram this. You know, wave 1, ABC wave 2, right? So we have a wave A, places the wave B high. That's exactly where wave C ends. And let me tell you, a lot of people ask, like, why the stuff I post about not about the stock market? What's it have to do with the stocks? And let me tell you, you don't think, if you really think that Tesla's correction happens to end exactly where the length of wave A, places the wave B high, places the wave C low is met, and then immediately turns around. And then wave 3, we get this pullback right where the length of wave 1, places the wave 2 low is met for wave 3, right? If you think that's a coincidence, right, then, you know, it's going to be difficult to, you know, trade in the market, right, realistically. Right? Because I don't see how someone could say, yeah, wave A, wave B, places the wave C low. You know, that just happens to be where it ends. And then once again, the equal X target is met. The most powerful tool in Elliott Wave is the equal X target, understanding the 5 waves up, 3 waves back setup. That is the whole premise of Elliott Wave. You see 5 waves up, you see 3 waves back. to the 50 to 61.8% retracement. But anyway, let's get into that. I've established that's the 50 to 61.8% retracement. I've established that Tesla has gone past the 161.8% retracement of 289.24. So I'm going to delete that. We're going to get into this count right here. I'll delete these unnecessary fibs. We'll talk about defining risk for Tesla. So I got Tesla, I got Tesla, very similar to ARK and OARK. I'll get into those soon. But I'm holding them about 2/3 Tesla, about 1/3 Tesla. Wave 1, wave 2. What's this? Well, it goes to the 161.8% retracement, so it's at least the wave 3, a shallow ABC wave 4 correction. And what the bulls are looking for, what the bulls are going to look for, a very useful way to define risk. This is wave A, this is wave B. Bulls are going to look for wave C to not pass the 161.8% retracement. Now, wave C could pass the 161.8% retracement of the length of wave A placed at the wave B high. That can happen, especially with a more volatile stock like Tesla. But 201.49, that's a very useful level. What could be going on with Tesla is that this isn't a wave 3 and a wave 4. We're having this more dramatic ABC correction, and we're getting close to the 61.8% retracement. What could happen, especially if Tesla turns around, it's a far way away, above 88.54, is that this isn't wave 3 and wave 4. Usually an Elliott wave, a bull flag, a wave 4 looks something like this. It's a bull flag that doesn't go below the 50% retracement. That's usually what wave 4 is. It looks something like this. When you get that dramatic ABC, kind of that 3, I just think about that, the drama part, right? The drama of it. That's usually not a wave 4. Doesn't mean it's it's a easy dip buy. It doesn't mean that, Tesla hasn't super cycle topped. It means that that's probably not a wave 4 if Tesla recovers. And if I look at the RSI, the weekly RSI, what could happen? Well, what could happen is that Tesla could turn around, and it could go above 70.19 on the weekly RSI when it breaks above this high of 299.29. So if it does break above that high, and it breaks above 70.19 on the weekly RSI, that's going to confirm what I'm talking about right now. That this isn't wave 3 and wave 4. It is, yes, another wave 1 and another wave 2. Now, the invalidation for a wave 1 and a wave 2 is lower. I think it was the 201 level, 0.85. But a more aggressive possibility is that this is a 1-2, 1-2 Elliott wave nest, just like Enphase Energy, and Tesla's not entering a wave 5. It'll turn around. The weekly RSI is going to break above 70.19, and it'll prove it's within wave 3 of wave 3. It goes to NVIDIA town. That's my honest technical bias. It may not happen. That is what I'm investing based on. So above the widest invalidation is 183.81. I like that 201.8 something level that I said before. It's not necessarily do or die time, but this is an ABC correction, and lining up with the S&P, lining up with the Nasdaq. They don't make these easy. Above 183.81 to 201 point whatever that decimal was. Tesla may not be entering wave 5 like Enphase Energy. The setup is still there. It enters wave 3 of wave 3. Want it to be very quick on K-Web. I think this is a 1, 2, 3, 4, 5 waves impulse, wave 1, an ABC wave 2 low at the 61.8% retracement. That's 78.6% retracement of 21.28. Is a useful invalidation for a wave 1, wave 2, wave 3 occurring. That minimum wave 3 target is 43. The further wave 3 target would be 47. I own, similar to Tesla and ARK, 2/3 clip, 1/3 K-Web. NIO, very kind of similar to, it's not really similar to anything. But just with China in general, and K-Web, I think that there's kind of a recovery going on. I could certainly be wrong about that. That's one of the reasons I own a lot of Clip, is to have an indirect covered call hedge and have premium coming in case China, doesn't recover for a long time. The good thing about Clip is that KWeb has a really high implied volatility. And so for NIO, the possibility is that this is 1, 2, 3, 4, 5 waves up. This is an ABC correction to the 78.6% retracement. That's all, pretty fair. For NIO from this low, there's a few ways to look at it. The first is that this is 1, 2, 1, 2. I think we're getting pretty close to this wave 1 high. What I really want to say about NIO is that I think it's got a pretty clear 1, 2. And what I really think it is that this is 1, 2. So I'll just tell you my preferred count. My preferred count for NIO is that this is a 1, 2 from this low, and this is another wave 1 and another wave 2. Now, they're going to say that's too bullish, and that's fair. But I think that looking within the cycle from this low, NIO forms 1, 2, 3, 4, 5 waves up. So I think this is 1, 2, 1, 2. A very wide invalidation, but very useful invalidation for this is 8.28. If NIO does hold above that, eventually it can recover and it can turn around like Tesla, like Enphase Energy, and it can enter wave 3 of wave 3 in the big picture. So within the cycle from this low, the invalidation for the most useful invalidation, I think, is this wave 2 low of 8.28. And there's a possibility this is 1, 2, 1, 2. NIO enters wave 3 of wave 3. You almost don't even have to look to see it's at the 61.8 to 78.6% retracement. One of the principles looking for that, wave 1 high, retest, regardless of if it's a wave 4 or wave 2 to be a, possible buy. That's usually a wave 4 rule. I think in smaller degrees, it can also be a wave 1 high that's used for a wave. Sorry, that may have not made sense. In Elliott Wave, there's a rule that says wave 4 retests the wave 1 high. I believe that if it's a small degree, if it's a larger degree wave 1 and a larger degree wave 2, that it's also prudent to look out for buying opportunities where a small degree wave 1 high is tested. So what I'm trying to say is, in my experience with Elliott Wave, the rule that wave 4 retests the wave 1 high is a useful principle. I think that also if it's a 1, 2, 1, 2 Elliott Wave nest, that small degree wave 2 can retest the larger degree wave 1 high. Okay, that makes sense to clear it up. For Li Auto, I actually sold Li Auto for a nice little gain, realistically, because I wanted to keep building up Chinese tech. So I might be silly for that. I'm taking a little bit. I still own XPEV, and I'm still, open to accumulating more, Chinese companies. I know that sounds crazy. I got time, and with Clip, I feel like I can, take smaller positions and ride out the volatility and get that premium that everyone's expecting from China anyway, and let that exponential growth compound. That's one of the benefits of having a large dividend bucket, is that while I'm waiting for these growth stocks to kind of do their thing, and Shaq took more than 2 years to make money on Google type of thing, the dividends are paying the bills. 20.80 is that low. All I was trying to say is I think that Lee, even though I don't own it anymore, if it does turn around, is probably going to be very good proxy evidence for NIO and XPEV especially. And I think that this 47.33, this setup itself is even kind of good evidence for the rest of the sector. It could look something like this. So what I think is that Lee may be a leading indicator. 34.07 is a little tight, for a really high beta invalidation. Normally, that 61.8% retracement of 30.98 is the more useful level. I think 34.07 is also very useful. But the possibility that this is and just looking at the RSI, I'm going to count this out too. 1, 2, wave 3, making a higher high, a wave 4, and a wave 5, where we can see Lee make a new high. I think that would be pretty good evidence, and most likely what happened with other Chinese stocks, especially Chinese EV, and seeing Lee break above this all-time high in the big picture could be a massive leading indicator that this is an IPO base. And that was the same debate with XPEV, and it's really the same debate with NIO right now. And seeing Lee break above this from an Elliott wave perspective would give a lot of evidence that's this is the same kind of IPO base that NIO and XPEV and Lee were all forming together. And Lee was just the very first one, if it does go decide to break to a new all-time high. Beyond Meat history, pretty 50-50 with this one. Just objectively, the first time I talked about Beyond Meat, it doubled and tripled. I said when it got to this level, it had a crazy 50% gap. I said that was, really a take profit type opportunity. And then when it did finally pull back, I thought that there was risk reward to say that within this cycle from this wave 1, wave 2 low, that this was a wave 1, this is a wave 2. So one of that did get invalidated. But one of the things that I say is that there's a law in Elliott wave that says wave 2 doesn't break the wave 1 high. Sorry, wave 2 doesn't break the wave 1 low. And in my last video, I said that the only exception to that rule is when it's a recent IPO. And Beyond Meat, Space, Palantir, all examples of recent IPOs. Palantir we saw break that ABC low. I'm not saying Beyond Meat's going to follow Palantir because there's a correlation evidence, but I've seen Beyond Meat, just to let you guys know, I've seen Beyond Meat on that eye volatility screener I talk about all the time. Implied volatility ranked near 0. Doesn't guarantee anything. It just highly suggests they're buying lots of straddles and strangles on Beyond Meat, playing a long gamma, long vega position, and they could benefit from a large move. They're probably going to need to be right that large move is going to occur from this low. I think this is pretty clearly at least 1, 2, 3, 4, 5 waves. So the possibility is that from this low, Beyond Meat right now at the 78.6% retracement, I don't need to get the numbers exact to know, above 9.81, there's the chance that Beyond Meat ends wave 1, wave 2, wave 3 from this low. So it's just a possibility. I think that's a very useful invalidation from this low. I think this is a pretty clear 1, 2, 3, 4, 5 waves up above 9.81. There's pretty decent RR that this could be. Who knows what this could be? But if it's an IPO base like Palantir, the whole point is that retail doesn't really know until it's too late. The find those straddles and strangles. I think that they're, sensing that, time's ticking, and wave 1, wave 2, 19.25, and realistically, Beyond Meat has its implied volatility spike, and the implied volatility spike resolves to the upside. It's going to go a lot further than that, equal X target, but, Beyond Meat going into the mid-20s above 9.81, definitely not the craziest thing to happen in markets. ARK I posted about, ROKU, very similar, so I'll just, be pretty quick with these. I think from this low, this is a wave 1 and a wave 2. This is another wave 1 and another wave 2 between the 61.8 to 78.6% fib. Useful invalidation is 34.72. ARK can enter wave 3 of wave 3. I think ROKU is giving a little bit of evidence for ARK just because from this low, whereas ARK forms an extremely similar wave 1 and wave 2 from this low, if we just focus on this cycle from this low, ROKU forms a pretty clear at least 1, 2, 3, 4, 5 waves, except what's the problem? Well, calling that 1, 2, 3, 4, 5 waves would mean that wave 5 is the biggest wave, and that's usually not supposed to happen unless it's a commodities market. That would suggest that if that's 5 waves up and it's not 1, 2, 3, 4, 5 waves, then yes, above 67.70. If Roku turns around, the daily RSI breaks above 77.67. Yeah, 77.67. Roku could be within a nest. I think this 1, 2, 3, 4, 5 waves impulse is very interesting for ARK bulls. Marathon Patent Group, RIOT, Bitcoin. I talked about them a lot. I just wanted to kind of see. They fell again, shocker, right? But Marathon Patent Group right now at that 78.6% retracement between the 61.8 and 78.6% retracement. I think that this is the debate is it's 1, 2, 3, 4, 5 waves up. The only problem is that in Elliott wave theory, there's a rule that says wave 5 ends with momentum divergence above 8.47. That suggests this isn't 1, 2, 3, 4, 5 waves up. It's wave 1, wave 2, wave 1, wave 2, wave 3 of wave 3 beginning. If Marathon Patent Group turns around and breaks 80.25 on the daily RSI, that's also going to support the case. RIOT blockchain, very similar. Bitcoin hasn't broken below this low of 24,815.78 yet. It's going to be interesting to see if the MMs decide to break it. I think Marathon Patent Group is going to be interesting evidence to see, because Marathon Patent Group and RIOT blockchain and MicroStrategy, they're not going to be trading. They're not going to be trading while Bitcoin is trading this weekend. So while I do believe Bitcoin above 24,815.78 is the most important level, in the bigger picture, it's very possible it goes 1, 2, 3, 4, 5 waves up and then ends wave 2. I know it sounds crazy, over the weekend and rallies, and then Marathon Patent Group and RIOT and MicroStrategy, they haven't even been trading. So they couldn't have gone and broken those lows. It's something that can happen in the special circumstances of crypto, with Bitcoin being this close to this low. I think Marathon Patent Group, and RIOT, holding, these lows of these, wave 2 lows within these cycles and setting up the opportunity of entering wave 3 of wave 3. Very useful in validation for Bitcoin.